generally speaking, it's good that the labor market still has remained above water. We're not seeing job loss on a monthly basis.
Right.
The unemployment rate's around like 3.7%, hovering in that range, which was not that much higher than it was before the pandemic. So it's kind of raised hopes that the economy more generally is going to be able to avoid a recession.
Welcome to Reporter's Notebook, where we talk to the Washington Examiner's top journalists about the stories breaking on their beats. I'm Jim Antle, and I'm joined today by economics reporter Zach Halaschak. Zach, cryptocurrency is what all the kids are talking about these days. What is going on with Bitcoin right now? What is the major milestone it's achieved?
Yeah, so Bitcoin actually just this past week crossed over 45,000, and that's the first time really it's been that high in months and months and months. 2022 was a very bad year for crypto, and this past year in 2023, it saw kind of a resurgence from. So to give some context, Bitcoin went as high as around 70,000 back in 2021. And then because of several issues, regulatory concerns, issues with just investments in general, concerns about a recession, it went down very low. And now the past year it's kind of staged a comeback. And so this year investors are really excited and hoping to see it get to even higher levels in 2024.
What's the latest on new job openings?
Yeah, so the newest job opening data came out this week and basically showed that the number of job openings is at the lowest it's been in quite some time. And that kind of shows that the labor market is starting to soften as the Fed keeps interest rates at these multi-year highs.
Sure.
And granted, it's not at these levels that are like raising alarm bells, but it's just showing that the rate hikes are beginning to filter through to the broader economy and to the labor market more generally. Now we have a jobs report that's coming this week for December, and that will shed a little more insight into exactly what the labor market's looking like or was looking like in December. And expectations are that it's not going to show super big declines in jobs, but it is going to show, again, that kind of gradual softening in the labor market that we've sort of been seeing over the past year. But it's good, generally speaking, it's good that the labor market still has remained above water. We're not seeing job loss on a monthly basis.
Right.
The unemployment rate's around like 3.7%, hovering in that range, which was not that much higher than it was before the pandemic. So it's kind of raised hopes that the economy more generally is going to be able to avoid a recession. And if you remember this time last year when we were sitting here having this conversation, a lot of economists were saying we'd be at about 4% unemployment right now, the economy would be in a recession, and it would be a whole mess. So it really does bode well for the coming year. And economists are looking at it kind of optimistically, but there's so many uncertainties going into 2024. We'll just have to see how that turns out.
Right. It does seem like there is a little bit more of an optimistic take, number one, on the labor market, and number two, in terms of our prospects for a recession in 2024. But obviously a lot's going to depend on what happens with interest rates and other factors. Yeah,
I mean, certainly. And, even just a couple months ago, the idea of rate cuts coming in just the next few months was kind of like, oh, no, it'll be further out in 2024. Now, because of recent inflation reports showing that annual inflation has been meaningfully fallen, there's this sort of perception among investors that the Fed's going to be again cutting rates sooner than previously expected. So most investors are expecting the first rate cut to actually come at the Fed's March meeting, which is just a few months away. And the Fed itself, at its last meeting in December, they released something called a dot plot, and basically they're predictions for the coming year. And the Fed officials themselves are kind of factoring in 3 rate cuts for 2024, but investors are actually expecting double that, up to 6 rate cuts. And that's good news for the markets. Stocks like it when rates go down. Stock markets like it when rates go down. So I think that's fueling some of that optimism that recession could be avoided. But again, the big uncertainty here is what happens if inflation starts ticking back up. And the Fed's going to have to hike rates again or keep them higher, and that could really spook the markets and cause some disturbances. So again, it's just going to be a wait and see type thing that we're going to have to see play out in the next few months.
It rates a certain amount of interest. Thank you, Zach.
It does, yeah.
You can read Zach and the rest of our policy team's coverage at washingtonexaminer.com.